Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at the last activity, Activity 6 in partnerships. If you look at question 6.1, required, you are required to fill in the correct term to complete the sentences. Write the correct term next to the question number only. So these are theory questions that you need to answer. Make sure for a test or an exam that you study the theory. So question 6.1.1. The partnership agreement is a written or verbal contract between a minimum of two people forming a business. Question 6.1.2. Profits and losses are shared in an agreed ratio between the partners. 6.1.3. The form of ownership has unlimited liability. Question 6.1.4. The drawings account will record how much each partner has taken out the business during the year. 6.1.5. The partnership has no continuity. If one partner dies, the partnership ends. Looking at question 6.2, required. Study the extract from the post-closing trial balance of Maxi Pet Supplies. Peter Roberts and Michael Monks are partners of Maxi Pet Supplies. So complete the following notes to the financial statement of financial position. On 30 June 2021, the capital and the current account. Now, before we continue, if we look at post-closing trial balance, what is a post-closing trial balance? This means that adjustments has already been done. The post-adjustment was drawn up. Closing transfers happened. And now they've completed the post-closing trial balance. And this is why, if you notice at the information given, there's no drawings. Why is there no drawings? Because drawings is closed off to the capital account. If we look at the additional information, it says all adjustments have been made in preparation of the post-closing trial balance given above for the year ending June 2021. If we complete now the capital account, how do we approach this question? They've given us an extract from the post-closing trial balance 30 June 2020 and 30 June 2021. The end of last year's balances is my opening balances this year. So we are going to start by filling in the information which we've got. They provided Roberts the opening balance, 153,000, and the closing balance, 255,000. The same with the partner Monks. His opening balance is 300,000 and the closing balance is 195,000. If we now go to the additional information, it tells you that the partners earned 12% per annum interest on their capital contribution for the first 3 months. Roberts and Monks decreased the interest by 2% effective from 30 September 2020. The same day, Roberts increased his capital and Monk decreased his capital. So if we look at the opening balance and the closing balance, you would see with Roberts, the difference is equal to 102,000. His balance is more at the end, and this is because he increased his capital contribution. But if we look at Monks decreased his capital, his balance is less at the end. So the difference is 105,000. And now we can calculate the totals. Beginning, Roberts plus Monks equals the contribution was only 102,000. The withdrawal of capital, 105,000. So if we take the balance in the beginning plus the contribution minus withdrawal, it equals 450,000. If we take 255,000 plus 195,000, it will give us exactly the same answer. Completing the current account. So again, where do we start? Yes, there's your 8 steps that you need to follow from step number 1 to step number 8. But now the way in which this question was given to us, fill in the information which you've got and then find the missing information. So they've presented you with the balances in the beginning and the end. So this is our starting point. We're going to look at Robert's. His balance in the beginning, debit 33,000, means brackets, negative. He had a debit balance at the end, again, brackets. Now we can solve the retained income for the year. Now please take note of the following. His debit balance is less at the end of this year. You can see compared to the beginning of the year, it's much less. This means the retained income for the year was a positive amount. To find that figure, we are going to add the 33,000 to the 2,690. If we look at Monk's retained income, at the beginning of the year, credit, no brackets. At the end of the year, again the credit balance, no brackets. So to find the balance in the beginning now, the retained income for the year. Take note that his balance at the end is less. This means that the retained income for the year was a negative figure. How do we calculate it? We take the difference and it must be shown in brackets. If we look at interest on capital, the partners earned 12% per annum interest on the capital contribution for the first 3 months. Roberts and Monks decreased the interest by 2% effective from 30 September. This means that for 3 months, the interest on capital was 12%, and then for 9 months, the interest on capital was 10%. So if we look at Roberts, his balance, 153,000 in the beginning times 12% times 3 divided by 12. Then he decided to increase his capital. So his new balance, 255,000 times 10% times 9/12. If I add the two together, the total interest on capital for this year is 23,715. If we look at Monk's, his balance in the beginning was 300,000. So we're going to calculate interest on capital at 12% for 3 months on 300,000, and then he decided to decrease his capital. So for 9 months, we're going to calculate at 10% on 195,000. If I add the two together, it equals the total interest on capital, 23,625. A partner is entitled to a salary as well. So if you look at what did they tell us about the partner's salary? Partners earn monthly salaries. Roberts withdrew his full salary, 336,720. So that's over 12 months. Monks was paid 246,600. But this amount included his salary for July 2021, which is outside of our counting period, which means he took his salary equivalent to 13 months. Now, salaries are debited to drawings account. What that means is every month when a partner decides to take his salary, drawings is debited and bank is credited. At the end of the accounting period, we need to show what was the partner entitled to over 12 months. So now I cannot just take that 246,600 and divide it by 13. Why? Because the salaries were increased effective from the 1st of January 2021 by 10%. This means that there's a calculation involved. So if we look at our accounting period, it ends 30 June 2021. It starts on the 1st of July 2020. He took his salary until July 2021, which is 13 months then in total. If the salaries increase effective from the 1st of January 2021, it means for 6 months his salary was at 100%, and for 7 months it was at 110%. So there's different ways now to get to exactly the same answer. If we look at option 1 and we use X, we say for 6 months his salary was at an X amount, and for 7 months it was at X times 110 divided by 100. Using X will provide us with the amount before the increase. Then we still need to add the 10% increase. We need to find out what was the amount after the increase. Why? Because 1 month needs to be taken out. We need to show the salary allowance over 12 months. After we've calculated after the increase, we're going to take the salary minus the 19,800. Option 2 will give us exactly the same answer. With option 2, I can find out directly what was the salary per month after the increase. We say for 6 months, it was at 100%. For 7 months, it was at 110%. I want to calculate the 110 over 1,370, and that equals 19,800. It's exactly the same answer. So to show now the partner's salary, if we look at Roberts, it was straightforward. It was given to us, and we've just calculated Monk's. His salary for this accounting period should be 226,800. Point number 3, they said Roberts earned a bonus of 27,720. So we are going to say Roberts, partner's bonus. Monk did not receive anything. Once we've completed this now, we can calculate the primary distributions of profits. To calculate it is partner's salary plus interest plus partner's bonus. And we do exactly the same for Monk's. Once we've calculated that, we can now find out the final distributions of profits. They said to us, partners share the remaining profits or losses in a ratio 2:1. Monk received a final distribution of 75,000. So that is given to us. So to find out what is it that Roberts is going to receive, we're going to say 75,000 times 2 divided by 1. Final distribution of Roberts, 150,000, Monk's 75,000. Now we can calculate the profit per income statement. To calculate that, primary distribution plus final distribution. Drawings becomes now the balancing figure. Profit per income statement minus the retained income for the year equals the drawings. we're going to do exactly the same for Monks. Primary plus final equals profit per income statement. Now, have a look. The retained income for the year is a negative, which means he took more than what he was entitled to. So to find out the drawings, we are going to take the profit per income statement plus 16,350. So what makes this quite challenging is the fact that you should know exactly how does this note work. Where does all the pieces fit in? And then secondly, what makes this more challenging is the fact of the brackets and working backwards to find those amounts or missing figures then. This concludes chapter 3 on partnerships. Thank you very much. I want to leave you with this quote. There is no excuse for not trying. Hope you have a wonderful day.